Have we done it?
And we
there
just
we
touched
yes,
it.
There we are.
Yep, we just
Dow,
touched it.
13,000. It has happened before, but it is a reality once again. For the first time since May 20th on an intraday basis, the Dow is above 13,000. No one I'd rather be with on this floor at this moment. What does it mean? What does it mean to the market? And what does it say about the journey the country, the world has been on for 4 years?
Oh, it's been dramatic. I mean, I've seen a lot, from the Kennedy assassination to the Cuban Missile Crisis and the crash of '87, but I've never seen a couple of years like this. This goes back to the 30s, I think.
Does this in any way, does this put the past 4 years, the crisis overall, into any kind of perspective? You said it's not technically important, but it's going to be splayed across the headlines tomorrow in newspapers around the world.
I think it is, and that's why I said before, it's a psychological importance. People say that's good, and you know, you may get some people saying, all right, now it's behind us, okay? We're back to where we were several years ago, and maybe we can move on from here. And I'd like to hope that's true, but so far it's all psychology, and right now they're not following through. There was certainly no burst of enthusiasm that followed it.
Yeah. I think one thing that's interesting is S&P's doubled from the March '09 low. Nobody really made a big deal about that. Double of the Dow would be 13,094. I wonder if that would be more of a touchstone for people mentally.
Well, I think what you could do would be to say, okay, now we've seen it in a couple of the key indices that we've doubled back up. And I think that would, again, inspire some more confidence. So, you know, I think people feel relaxed for now. Employment numbers and other things seem to be going the right way. So we'll have to wait and see. This is just another little icing on the cake.
Yeah. Although, Jim Paulson, you were on earlier in the program, and it's good to have you back. It is going to bring some comfort, I imagine, to long-term bulls like yourselves, that this stair-step pattern remains intact for now, yeah?
Yeah, I mean, if you're going to go higher, you got to get through 13,000. I guess what I think, Carl, is that I wonder at what point, when you go through milestones like this, it makes you think, at what point does the attitude become focused so much in the last 3 years on risk, and this is a low reward, high risk market. At what point will the attitude change towards, am I missing out? Am I missing out? And I think that these kind of milestones and the headlines that come from them and the discussion around them, I think starts to send the attitude away from risk towards, you know, what am I missing out on sitting in cash when this thing just keeps grinding higher? Yeah,
you couple it with some of the IPO chatter, right? With some of the M&A chatter that's building, Art.
Absolutely.
And there will be a point at which doormen in New York will talk about it, cab drivers, your dry cleaner. Did you see what Apple did today, right? Only one, maybe on a broader level.
Absolutely, and I think Jim is dead right that what you're going to see is people say, you know, I stayed away from the banquet because I thought the food was poison, and now I'm getting very, very hungry here.
Jim, I wonder though, obviously people will want to use the moment and then ask whether volume backed it up. Yep. That has not been the dynamic so far this year.
No, you know, in some ways it hasn't been the dynamic throughout this entire 3-year run. There just has never been a show of great, you know, a lot of different players wanting to get into this market. In some sense, Carl, when that volume shows up, I'm going to get more concerned about risk if it becomes that popular.
Yeah, and from the perspective down here, some of this may be structural. Things like ETFs, the very liquid ETFs, which don't evolve back down into the stock market. So some of that absence may not mean people aren't interested or playing. They just may be playing in a different yard.
Yeah, we had the head of TD Ameritrade earlier this morning has an interest in saying that the retail investor is coming back, but in his words today, they are slowly.